Hello everyone, welcome to this episode of Market Pulse. My name is Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the major indices Nifty and Bank Nifty have been doing and are likely to do in this coming week. Let's get to the charts. All right, let's begin with Nifty. So remember, this is the season of Q3 results, so you got to be stock specific and careful. Uh, On the monthly chart, again, a strong trend up, but from December onwards, we were selling. We made a new low, though albeit a slight this month, and it's yet to be over. And probably with this kind of formation, there could be some more pullback in the markets before we see a rally up, or it could remain range bound for some time. The demand zone on the higher time frame still remains the same. That is the monthly demand zone. Prices here might move up based on smaller time frames, but this is not a great structure on the monthly chart. All right, so strong uptrend, pullback in process after hitting a new all-time high in Nifty. But remember, this all-time high did not sustain, and we had a immediate sell-off from December onwards. So this could just be a fake out as well. Taking a cue on a weekly chart, so that's where we are right now. All right, and here is an area of supply in this, though not very clear on the weekly chart, but on the daily, there will be some important supply zones there, which will be offering resistance to the price to move up, which changes. So that's a weekly supply zone. This demand zone has been tested multiple times. If you see for the last 4 weeks, approximately, we have been range bound between that 17,750 odd areas to approximately between 18,200 to 300. And first of Feb, we also have our budget coming in. So we could see more wide range coming in the next few weeks. And if this demand zone is broken, then we probably will be heading towards somewhere here. But for us, the best areas to look at going long from a swing or long-term perspective will be this area of demand zone, which is about 16,000, but it's right now too far. For that, we'll have to first get out of this consolidation price action on the weekly chart. So based on the weekly, we are pretty low on the curve. When we come to the daily, if you see this, that's quite a staggered move down, and this is also an area of demand zone. So probably 17,700 to 600 is where I expect, if at all we go down here, we could see an immediate bounce coming in from that. So those who are in shorts, keep an eye on this. If prices fail to break 17,760 or that 750 odd levels, you should have your trailing stop loss set in, so that if price moves up, it will move up with a great force. The best areas of supply here is going to be this. So that's going to be the range, wide range for the index. It can go up all the way depending on how the money flows into this market. But as of now, 18,300, 17,700 are the areas which will govern the prices. If we move down, there could be an intraday dip towards this, where it will be probably a good idea to book most of your shorts and wait for new clues from price action, because if it comes in the same manner here, we could see an up move in price pretty faster. Smaller time frames, again, similar thing. This area is getting held and price is unable to move up really high. So till this happens, you have to remain as a day. This is more of a day trading thing and stock specific. Index probably here where you can look at some swing long on confirmation, or if we come somewhere up to 18,500, then swing shorts if at all we go there before we hit this. So we are low on the curve. Be cautious about getting into new shorts. It's not advisable at low on the curve. Existing shorts should be looked at partial booking or trailing, and longs only on confirmation. That's what we have on the Nifty. A quick look at Bank Nifty now. So on the monthly chart, Bank Nifty, this is more stronger trend as compared to Nifty. Went up, nice rally, but again, still I don't see a good demand area in this on the monthly chart. For me, the demand still stands at about 33,000. So this is going to be tough for it to break, but it's right now very far. Don't know whether it will come here sooner or later, but if whatever goes up will come down. So if it has to come here, it will start moving down, and this could only be a speed breaker for the price before it heads down to its demand zone. We'll have to wait for more price action to understand what is going to happen. So similar to Nifty on the weekly, if you see, that's the area where markets are being range bound. That's the weekly demand zone where we had the prior all-time high. Not convincing a rally, I would say. Very strong sell-off, pullback, again sell-off. This is a crucial demand zone. If this area is broken, then Bank Nifty next stop is going to be somewhere close to 38,500 approximately. That's where swing long positions can be taken. But so far, it's more of a consolidation and a small tight range. Probably that's how prices will behave in for the next 1 or 2 weeks before it starts giving some direction based on price action close. That's what we see on the weekly. Again, still uptrend, though here we don't have great demand zones. The next best demand zone is still here. This pushed it up but could not give a new high again. And that's what we see on the daily, nicely gliding down. No great demand zones in this, probably till this is the best demand area or somewhere close to about 40,800. So that's where if this fall has to get arrested and some meaningful bounce like this to be seen, then the next area will be somewhere close to 40,700 to 40,000 area. Otherwise, there is no great demand zone anywhere till this point. So maybe somewhere here we might have on a smaller time frame some nice demand zones which will push back again these two areas of supply zone. So there is an area of supply that has been formed which broke that trend, and now we also have another supply zone. So again, range bound activities, wider range will be somewhere close to 44,000 to 40,000 in lieu of increase in volatility due to budget and result season. On smaller time frames, if you see, what do we have? So that's the area of demand zone which is holding it up. So technically, the demand zone is here. That's the best demand zone, but this is the area from where the gap up happened. And that is what is being held. But if you see, again, went to the supply, same force came back, it's unable to move up. If you start moving below 41,700, there's a great chance that we could break this and move towards 41,200, 41,300, where you could look at covering up your shorts. Right now, you should be looking at trailing it 41,600 and below. Good areas for shorts to be covered and confirmation longs to be built in. So cautious approach. It's a range bound activity. If you're not sure, stay intraday on the indices and be stock specific as per their results calendar.